Hello, Oracles. Why buy Tesla stock now? This video is not about trying to convince you to buy Tesla stock at all. This is not financial advice. This is just a video to give you guys some information as to what the mentality is out there in the market right now so that you can make a better decision for yourself and your investing opportunities. So again, this is just some information that I'm going to present to you. I'm going to present both sides of the coin so you guys can make a decision on your own, whether you want to invest, not invest, whether you want to invest now, invest later. And my goal today is to be able to present to you guys information so that you can make a better decision. So you can let me know down in the comments below what you guys think about all of this and what your investing strategy is going to be. And so the first thing you need to ask yourself is, what type of investor are you? We had discussed the other day about several different types of investors. And if you are an actual long-term holder and investor in Tesla stock, then the fundamentals are going to be the most important piece for you. So you take a look at the fundamentals. Where do you think the company is going to be going in the future? We'll dive into some of those fundamentals right now. And as a long-term fundamental investor, you just need to ask yourself, do you think the price of the stock right now is going to be giving you a good return on your investment 5, 10 years down the road, whatever your time horizon is? And so looking at the fundamentals of the company, we've got Gary Black here retweeting TSLA Chan's information about China's insured vehicles for last week. And last week, Tesla hit 16,121, which is up from the 14,366 we had seen in the previous week. So this is something we have been speaking about for the last few weeks, just wanting to see these numbers continuing to go up as we get through the end of the year. One of the questions we had recently was about the China demand. Seems like we are facing that right now and coming in strong. So we do have down here with BYD coming in with 38,483, but that is new electric vehicles. That also includes their hybrids. So I do not see any information in here right now about the battery electric vehicles that they had insured for last week. So once we get that information, I'll share that with you to show where Tesla stands based upon BYD and their battery electric vehicles. And here we have the accountant breaking it down, showing that through the rest of this month, we are showing projections of 77,200 vehicles based on the insurance registrations. So that means that going into December, even if we just take the numbers as they are and they do not grow anymore, we should be looking at over 100,000 deliveries coming out of Shanghai alone. And then we've got Mathias Fons coming out saying Tesla deliveries in Norway. Today was the second biggest day of 2022 for Tesla deliveries in Norway, with a total of 268 Tesla vehicles delivered. 204 or 76% of those were Model Ys from Gerber, Berlin. Tesla has now delivered a total of 5,830 made in Germany Model Ys. So this is also great fundamental news that Germany is supplying a lot of the countries over there as they are ramping up. And as we had spoken about yesterday, Berlin's ramp rate has been increasing and increasing so well that they have decided to move up their third shift back to mid-December. They had pushed it off to 2023. It is now back to mid-December so that we could possibly see near 4,000 vehicles getting delivered per week by the end of the year. And so then the other things that we pay attention to when it comes to the fundamentals are the company itself. Is it making money? Yes, Q3 we saw bringing in $3.3 billion in free cash flow, and that is most likely going to be increasing. I have a feeling we are going to be seeing record numbers of free cash flow coming out quarter to quarter going forward from here on out. Tesla's all about cutting costs. We also heard yesterday rumors about a revamped Model 3 coming in Q3 of 2023 to be able to cut costs even more. And in cutting costs, that means that their margins are going to be going up, and that gives them even more pricing power. We have been talking about pricing power and how valuable that is when we get into situations like a potential deeper recession next year. If that does end up happening, Tesla has that pricing power where they can come down on their prices, still make them appealing to the majority of their customers that are out there. Meanwhile, competitors who are not making any money on their electric vehicles as they are right now will end up having to take a loss on all of these. So these are the great fundamental things that we are seeing for Tesla going forward in the long term. That doesn't even include FSD, which is going to be solved most likely in the next couple of years. That does not include energy revenue that is coming in. That does not include Optimus. So many other fundamental pieces of the company that we can see going forward in a very strong manner. Now we're going to take a look at the other side of the coin. What do we have, especially with the near-term noise that is going on with Twitter? So while fundamentally the company is very strong, there's a lot of noise that is going on right now. We've got Gary Black here mentioning that Morgan Stanley asked institutions whether Elon's investment in Twitter has impacted Tesla stock. Not surprisingly, 73% of institutional investors, 43 responses, said Twitter has had a significant impact. and 40% said it accounted for more than half of Tesla's underperformance. So this tells me right here that there's a lot of institutional money that is sitting on the sidelines waiting for this noise to clear if it is going to clear. We can discuss all day long whether we think it's going to clear or not. A lot of people are saying that Elon is poking his head into a hornet's nest that he shouldn't be in. Other people are saying this is a great thing. This is going to be disrupting mass media. But if we're going to be disrupting mass media, what else does that mean? A lot of other implications can go into this. So is this going to be near-term noise and end up fading away? Or is this going to be something that is going to linger a lot longer and affect Tesla stock for even longer as well? And then we've got Alexandra Mertz, aka Tesla Boomer Mama, saying, prediction, 56 days to go until Renee Lipsch, the rating analyst from Moody's, will finally acknowledge the investment grade rating that Tesla long deserves. We'll do a daily countdown until January 24th, 2023, or how about you surprise us with some early action, Mr. Lipsch? So she's calling out Moody's again, and we are most likely going to be seeing this coming after Q4 earnings. Now, we did see that last time they did it in early January, so perhaps they don't do it at Q4 earnings. Maybe we get it before, maybe we get it after delivery numbers come out. But Moody's is the next one. So right now we do have a split credit rating. Not a big concern because Moody's will end up doing this relatively soon. And so when they do, going back to those institutional investors who are waiting for this whole Twitter noise to clear up, we are now going to be having that situation that we had talked about previously, where we have institutional investors, even more of them now, that want to get into the stock now that Tesla is going to be investment grade rating when it comes to their credit. They can now get into this. So we are just waiting for that investment grade rating. We're waiting for the Twitter noise to clear, and then the door will open up for a lot of big institutional money to come back in. But again, going back to Gary Black's point, when is that noise going to clear? Is that noise going to clear? Now we're going to listen to a little breakdown from Ross Gerber about all of this. So it's very important. Ross kind of does see both sides. He's a huge Tesla bull, as many of you know, but he is being pretty real when it comes to the whole scenario right now. And his breakdown as to whether this is going to be a great buying opportunity or not.
Tesla, that's really the next stage, 2023 for Tesla, is building Cybertrucks, building semi-trucks. And there was some talk today about sort of revamping the Model 3 a little bit. We're seeing production increases in Germany and Austin now. We're seeing very, very good production numbers out of China despite all this, and then continued growth in production numbers out of Fremont. But the more we can get Berlin and Austin running to diversify the supply of new vehicles, the better, just in case there's issues in China. Also seeing good information on battery supply, cell supply, chip supply, all the different areas that have been hindering production and adding costs. I actually expect to see Tesla lower prices moving forward as their costs go down and they want to continue to be competitive. Now, we also have the new laws coming into play in 2023, which Tesla will be a huge beneficiary of. Basically, everything is lining up in Tesla's advantage, and Elon is doing everything possible to make the stock go down. It just seems crazy, this Twitter adventure, and how he's managed to distract everybody from all of his success to focus on one area he is not managing well, and that is the expectations around Twitter. Unfortunately, for somebody who doesn't like PR people, communications teams, got into the media business thinking it was actually an engineering business. And the truth is it's both. Advertisers don't want to advertise with Elon Musk. They want to advertise on Twitter. And what he's done is he's made it that advertisers have to advertise on Elon Musk. And they don't want him because Elon Musk's brand isn't what they like.
And so in there, Ross is breaking down the fundamentals, how strong they are. Production is doing well in Berlin and Austin. Production is doing extremely well over in Shanghai. We are seeing great opportunities right now for the stock fundamentally for the company. However, Elon is doing everything he possibly can to bring the price of the stock down by doing what he is doing over on Twitter. Now, you guys can let me know in the comments below, are you taking that as a buying opportunity or are you not? Again, this is one of those questions to ask yourself, are you going to be taking advantage of this? Do you think the company is going to be doing well long-term? Do you think this is going to be short-term noise? This is where we just ask ourselves those questions to make a better informed decision as to whether we want to invest now or whether we want to wait or maybe not even invest at all.
And so some people will advertise on Elon Musk's platform, but many more will not. It needs to be Twitter again and not Elon's Twitter. And for it to be Twitter again, it means a group of people need to be in charge of moderation, and he needs to step back. The best thing he could do right now for Tesla and Twitter is to just step back, not change anything that he's doing per se to make Twitter better, but to just step back so the focus can be refocused on his successes and not what seems to be his failures. Now, it's too early to say whether he succeeded or failed at Twitter, and I actually very much believe he will succeed. But nobody can deny the damage that he's done to his brand and the damage he's done to the Tesla brand on the short term. Now, it's reflected in the stock price. Institutional investors have sold Tesla stock, many of which, that's why it's down, because of this behavior. In fact, we had another discussion in our own investment meeting about Elon's behavior, where I said, actually, Elon's behavior has been the same the whole time. Remember, he attacked a cave diver and went to court, literally went to court to fight this case and won over the pedo guy.
And now here I fully agree with Ross. I do think that Elon right now has been pushing a lot of advertisers away just because of who he is and how he behaves. Now, granted, many of us do appreciate that, whether we like it or not. We understand that he is just being Elon and Elon is being Elon. However, when it comes to advertisers and how it works, when it comes to the finances, when it comes to Twitter, the advertisers are going to look at that negatively, and that in turn is destroying his brand when it comes to advertisers. Now, of course, we can see his followers are growing. More people are coming to Twitter. So when it comes to his brand itself, yes, when it comes to advertisers, they're not a fan of it. When it comes to institutions, they're not a fan of it. However, when it comes to a lot of retail investors and a lot of the mass population, they do appreciate it. So you guys can let me know in the comments below how you feel about Elon's brand itself and whether you think it's going to be good in the long term or whether it's going to be detrimental in the long term. Now, as Ross said here, it is most likely going to be something just near term. It is going to be some near-term damage to the brand itself. And again, if Elon steps out, and I think that should be happening in the next few months, if he steps out of this, puts a management team in place, they can show that Twitter is now solvent again. Don't forget that all the layoffs that they just did and all of the severance packages that they're paying out are for 3 months. So we're most likely going to be seeing a lot of their costs still being high when it comes to Twitter because of all these severance packages. However, once we reach that 3-month point, all those packages will be paid off and they'll be running a significantly more lean team and much more lower costs over there. So the team that they have in place will be producing even more with even less as they are right now, and they won't have those extra expenses of the severance packages to be paid out. At that point, they can show that they're solvent. At that point, Elon can say Twitter is solvent, which means that he will not have to sell any more Tesla stock to be able to float Twitter along. This is another green light for institutions to get back in. He steps away. He confirms that the solvency of Twitter is good. Institutional investors are now happier again with Tesla stock because they know that it's going to be solid going forward. They can now refocus on the fundamentals of the company and a lot less on the noise that Elon is bringing to himself.
So I don't think Elon's behavior is anything new. I think it's actually normal for a genius to act this way because they're not normal. But I think there's a lot of noise and a lot of people working against Elon as well. And you have to keep that in mind. You have to keep that in mind that his competitors, the media, is the reason this whole thing is happening. Because Elon decided to disrupt the media business, and the people in the media business decided they were going to disrupt Elon's business. And that's what this is. And it's no different than 2009 at Tesla. It's just no different. Everything's going great, and the media is just destroying Elon every day. And that's exactly what's happening, and it's creating a huge opportunity for investors. Nothing wrong with Tesla. So investors, be patient. This is a buying opportunity, but you're going to have to be patient because it's going to take a few more months for this Twitter stuff to sort of wind itself down on the noise cycle, and it will become less noisy.
And so, yes, Ross here just reiterating the fact that this is a lot of noise. This is a great buying opportunity for Tesla. You guys can let me know in the comments below if you feel that way as well. I personally do. This is why I dollar cost average every single day and add more as we dip more. So for me, I think it is. How much further down can we come? I don't know. We still have a lot of macro stuff that's going on right now. Again, CPI and PPI are coming out in the next couple of weeks. FOMC meeting. We've got interest rates going up again. Lots of other things that are still going on in the macro environment with potential recession coming up as well. So all of these things are going to keep the entire market down. But when it comes to Tesla specific, the timing of all of this could be ideal because we could be pulling out of this macro stress that we're in right now at the same time that Elon comes out and says, by the way, Twitter is solvent. By the way, I have a management team in place. By the way, we have the Cybertruck rolling out. We've got the Model 3 getting revamped. You've got a compact car coming out next year. We have the semi-truck that's already rolling out. We are going to have all of these things coming in all at once. And then when that happens, we also have the investment grade rating from Moody's. So we're going to be seeing a lot of institutional money coming back in. We don't know when that's going to happen. Personally, I think it's going to happen probably within the next 3 to 6 months. I do not know how quickly we will turn around, but that is my personal opinion. And you guys can let me know in the comments below how long you think it's going to take before all of this culminates, if you think it's going to culminate all at the same time. And then again, as I said, I'm going to be playing both sides of this to give you guys as much information, not sway your decisions one way or the other. We've got Chicken Genius coming out. My friends, I know you've been sitting on cash for months, no signal, nothing. I continue to ask for your patience. Catching a falling knife is stupid. If we miss the bottom, we ride the momentum up. Simple plan, but hard as foretold mentally. Some of you read that a different way, but I have heard it as foretold, and I like it that way. So when it comes to Chicken Genius here, and we've got Positively Charged chiming in as well, saying, if we miss the bottom, we ride the momentum up is not good advice. Most people are better off catching a falling knife and developing the pain tolerance to hold it. 99% will miss the bottom, and another 90 of those will not get back in time. Your advice will hurt your followers. And then we've got Tesla Synopsis reacting, saying, all due respect, that is a trader's mentality, not long-term investor's game. Many of your followers are very loyal to you, and you're teaching them trading, not investing. So just to break down my thoughts on this from a both technical analysis standpoint and from an investor's standpoint as well for long-term, when we got the COVID bounce, it was a V bounce. That was a very narrow opportunity for people to get in. And if they missed it, they were going to be missing it and they were going to be riding it higher up and trying to catch it with FOMO type mentality. This time around, if you look historically when it comes to the housing market crash that we had, when we see the stock market turning around, it is going to be gradual coming out of this. So my personal feeling on this is we don't know when it's going to turn around. Based on history, we see the market turning around when the Fed ends up pivoting. So we have not seen that pivot coming yet. We have not seen signals for that pivot yet. The market looks ahead 6 months. So when we do see the Fed kind of hinting at a pivot coming, that's probably when we are going to start seeing the market turning around. But it's going to take some time. So I think on both ends of the spectrum, we can play out here. So I don't know how much further we're going to come down again. We do know that Chicken Genius said that 140 was the level he was looking at. So we can ride it down and buy on the way down, and then we could buy it on the way back up. Again, that's not financial advice. That's just what I am doing. But thinking about the fact that we are going to be coming past these levels again in the future. So whether we buy on the way down or on the way back up really does not make any difference. However, if you're trying to time the market like he is suggesting we do, then yes, that is more of a trader's mentality. Trying to time the market is very difficult. But as he said, even if you don't hit the bottom, we most likely will have some time on the way back up to be able to catch these prices again if this is not the bottom. And so whichever direction you choose to go with your investments, whether it's going to be catching the falling knife, which is what I am doing, or if you're going to wait for the bottom and ride the momentum back up, which Chicken Genius suggests, everybody that we have seen here today has all had the same exact mentality, which is just be patient. We need to be patient. Even if you are catching that falling knife, it's going to be painful, but it's okay. Just ride it out and be patient. It is going to end up coming back up at some point. We just don't know when. And that really is truly all that we can do. When you look back historically at the housing market crash, at the dot-com bubble, it was all about patience. Again, when you're holding a plank for a minute, it seems like forever, but when you're having fun, a minute goes by just like that. So, just think about the fact that we're in painful times right now, and it just seems like they're lasting a lot longer because they are painful. Remember the last 2 years when we were skyrocketing and enjoying the couple of splits, the S&P inclusion? Well, yeah, those times fleeted right by. You don't remember them at all because they were good times and they're gone. We will end up looking back at these painful times in the same manner. We're going to be like, wow, that actually wasn't as long as we thought, but in the moment, it is extremely painful. So again, we go back to the question at the beginning, why buy Tesla stock now? Personally, I am buying it because I think we are near the bottom, don't know if we are at the bottom, and I do not mind dollar cost averaging because historically that is the best way to garner wealth for the long term. And so you can let me know in the comments below if that's a strategy you have, if you are going to be waiting for the momentum back up, or if you're just going to sit this out altogether. And me personally, I want to catch that falling knife because when we do end up turning around and we get that momentum coming back up, we'll most likely be having these institutions dropping big money in before we even recognize it. So coming back up, we may not catch it at these prices again either. Again, I do not know the future, but that's the reason why I am playing the dollar cost averaging on a daily basis now, where some people are calling it catching the falling knife. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a membership program and a Patreon. Those links are also in the description. Thank you so much. Have a great one.